Welcome back to Morning Markets on Tuesday, the 3rd of August. A quick roundup of markets yesterday. In equity markets, you had in the UK, the FTSE 100 up around 0.7%. In the US, the S&P 500 broadly flat. You had the Nasdaq up around 0.1%. In Europe, the Stoxx Europe 600 was up around 0.6%. In Japan, the Nikkei 225 down around 0.5%, and in China, the Shanghai Composite down around 0.4%. Asian markets disturbed overnight by concerns that Chinese authorities will spread their focus wider than the private education sector, with eyes on the online gaming space. Within bond markets, you had the yield on UK 10-year gilts at around 0.52%, so in around 4 basis points. The US 10-year Treasury yield came in at 1.17%, so in around 5 basis points overall. And in terms of currency markets, you had the dollar, which was slightly weaker on the day, down around 0.12%. Sterling against the dollar, 139. Sterling against the euro, around 117. As we guided yesterday, we've had quite a few PMI data prints out yesterday, so I'm going to focus here just for today. As a quick reminder, PMI stands for Purchasing Managers Indices. We receive monthly readings, hence the term comes up frequently on morning markets. They are of particular interest because the index really gives a sense of the direction of trends in areas such as new orders, output, employment requirements to meet both demand in the manufacturing and the service sectors. If the reading is above 50, it suggests expansion in the index from the previous months. Below 50 is demonstrating contraction. So a reading above 50 is a good sign. Yesterday, I touched on the data from China. This morning, I will cover off the US and Europe. If we look first at the US, we had the IHS seasonally adjusted manufacturing data come in at 63.4 for July, up from 62.1 the previous month, demonstrating real strength in the rate of expansion of new orders and output. Output expectations remained upbeat with hopes of further boosts to client demand over the year. Supporting the optimism was an uptick in production levels to meet the growing domestic and international demand levels. Input costs continue to present a headwind. This was demonstrated with signs of stockpiling occurring, with companies seeking to shelter from future price rises, limiting the finished good output, creating backlogs, which in itself is adding to the issue. We've just discussed there the IHS reading. There are several providers of PMI data print. Another who published yesterday was the Institute for Supply Management, so the ISM index, which typically is more focused on larger firms. The reading from the ISM index was strong. It was 59.5, but demonstrated a slight moderation from the previous month's reading, which was 60.6. So still a strong reading, but demonstrating a slight moderation, with larger firms experiencing challenges from rising input and labour costs. The moderation in forward expectations in the manufacturing sector for larger companies there did draw an element of concern from investors, encouraging the move towards US Treasury bonds, hence the move we experienced yesterday of bond yields moving in lower. For the Eurozone, the manufacturing PMI number for IHS, which is a broader market size, broader company size index, that came in at 62.8. A strong reading, but again marginally softer than June by around 0.6. The number is demonstrating expansion. It's supported by the bloc's manufacturing powerhouse at this stage, which is Germany. Rising input costs were not immune to the US. They were also cited in the reports for IHS for Europe. However, the reading is demonstrating real optimism there for the manufacturing sector as we look forward. On a global basis, the IHS Manufacturing Index came in at 55.4, so again above that level of 50. The table just on screen now demonstrates that of the 29 individual countries which were surveyed in the July round, 22 are demonstrating expansion in the index. You can see the laggards there are the emerging markets, who are still facing a number of challenges around vaccination levels, as we've discussed. One more thing, just in terms of central banks elsewhere, overnight we had the Reserve Bank of Australia, so the RBA, maintaining rates at 0.1%. They're also maintaining the yield curve control program, so maintaining yield levels of bonds reaching out to around 3 years in maturity, keeping yields at current levels. This will be achieved through the continuation of bond buying in the market, essentially at a rate of around $5 billion a week until early September, and then $4 billion a week until at least mid-November. So that policy will remain in place for a few months to come. Thank you very much for watching. We look forward to bringing you up to date on morning markets tomorrow morning.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.